Hey guys, today's video is a few simple money saving tips. So let's get started. And number one, probably the most important tip, is not to buy new cars or finance new cars. Now, when you buy a new car, the moment you get in that car and drive it back home, you've lost thousands of dollars in value just because, now it's a used car. Now, you need to take into account as well that in general cars lose a huge amount of their value in the first 2 years. They say that your best sort of car to buy is a car that's between 2 and 5 years old, because in that age, especially around sort of 2 to 3 years, they've lost a lot of the initial sort of value, and the car's still in pretty good shape. Now you need to check the mileage and things, but in general, with just 2 years of use, a car's pretty much new. And if we're talking about expensive cars here, you'll see that they've dropped a drastic amount. Take it for example, the BMW i8, about 120,000 new. After 2 years, you can find them for around 60,000, 64,000, something like that. So half price basically, and they tend to have quite low mileage as well. So get a car that's just only 2 years old, and you'll save yourself half the money. Now with finance as well, you end up paying interest. Now the interest not usually too much on sort of well, it depends on your credit and things, but they can be very high. You can get car loans that are sort of on finance that are around 30% or more. In general, you can find them very low as well. That depends on your credit, where you are, your circumstances, how much you earn and things like that. But the problem with financing cars is that say you get a new car, it's on finance for 5 years. Now you have the car 2 or 3 years, then you order that car, or you earn more money, whatever, and you want a new car. So you get a new finance deal, and you transfer the old debt. So you end up with huge payments, and people just keep doing this to get a new car, and they still owe years on the first finance deal, and you end up with more and more debt. And remember that cars depreciate in value, so you can end up with having a vehicle that even if you sell it, you won't be able to pay off the loan. The loan will be more than the car's worth, and as time goes on, the car will just depreciate in value. Now there are some cars, of course, that appreciate in value, but that's very rare. Not new cars. We're talking about vintage cars, cars that people like to collect and things. Almost every car will depreciate drastically in value, especially new cars. Now, another option here, to save money if you do have a business, is to get a lease, a hire purchase lease or contract lease, and then you just have the car for 3 years, and then you return it, and basically all you're paying for is the depreciation, and you get a new car each year. That's what a lot of businesses do, because you can use it as a tax write-off. Now number 2 is budgeting. Now you need to budget if you want to save money. You need to work out your income and your outgoings. So if you have $5,000 wages, but you're spending $6,000, then that's bad. But if your if your income is $3,000, maybe you're only spending $1,000, then that's great. It's all about budgeting correctly. There's lots of people that earn huge amounts of money, but they just spend it all. So they're worse off than someone that's on a very low wage that is actually investing and saving. So you need to, there's applications for this. You can do it on Excel, you can write it down, whatever you want. You just need to work out all of your expenses, and how much you've got for the month, and just see put a set amount for food, transport and things like that, and try and stick to that amount. First month, just see how it goes, see if you're roughly around that point. If not, you can adjust it a bit. Now, number 3 is to use multiple accounts. Now, why would you use multiple accounts? Well, it's just to kind of separate the money off. So you have one main account, income and wages. Then you want to set up an account that sends around 20 or 30% automatically, and that will just be for investing and saving. You could do 10% in a savings account and 20% for investments. It depends on you, whatever you want to do. I would suggest just all in investments, but and then you will put, for example, a large part of this, say 60%, that will be for your general costs. So that will be, if I say 50% for general costs. So you'll be putting in there, for transport, for food, for your rent or your mortgage, any sort of clothing and things like that you need, necessities. So you'll have 50% for that. Then you have 10% and in another account, and you should put in that account. That will be basically, an emergency fund. So if anything goes wrong, if the car breaks down, if you have an unexpected trip to hospital and you've got a big bill, then you have that 10% you've been saving each month, and that will help you pay that off. Now your final 10%, you put in for things that you enjoy. Basically, it's a fun account. It's to buy, a PlayStation. I don't know, to go out drinking, whatever it is you enjoy. That's your money to spend. So if you want something that costs more than that 10%, then you'll need to save that for a couple of months until you've got that total amount. You should stick to that amount. So that's a very good idea. That's what a lot of wealthy people do. Just organising your accounts like that, because once that money comes in, and then straight away 30% in investments, 10% is being saved in the emergency fund, then you know what you've got left, to use, for your food and things, and it just makes saving a lot easier. Because when it's all in one account, it's very easy, to mix things up, to spend too much and stuff like that. So last point here is to try and reduce your costs of food, transport and that kind of thing. So food's an easy one to decrease your spending. All you need to do is stop eating out and stop ordering deliveries. If you order from Uber, Deliveroo, those kinds of things, delivery applications, the best thing to do is find the foods you want and just ring up the restaurant and get a delivery. It's normally free delivery. You avoid all of those, the additional costs that they put on, because they increase the menu prices and then they charge you quite a lot for delivery as well. So that's an easy way to, reduce your spending on food. Obviously eating out as well. If you're in the United States, reducing the amount that you eat out will drastically reduce your spending, just from the tips alone, because we all know how much that they are expected to tip, unfortunately. It's just the way it is. But anyway, even without the tip, it costs a lot to eat out. Starbucks coffees, $5-6 a day or whatever it may be. Count that up, 10 days, $50. 30 days, $150. Make that over 10 months, $1,500. You're spending nearly $2,000 a year just getting one coffee a day. So you need to take that into account there a little bit. Things like that is what really can make the difference between, you could have 2,000 extra invested, or to enjoy, or you could waste it really on eating out and things that, let's be honest, most places are unhealthy. All they're going to do is make you gain weight, make you feel worse, and waste a lot of your money. So food's probably one of the best ways to reduce spending. Transportation's a little bit more difficult. It depends where you live, of course. If you live in a city, normally like metro is one of the cheapest ways to move around. Normally having a car is extremely expensive if you live in a busy city, like London for example. If you go on the metro, it will take you 20 minutes to get somewhere. If you're in a car, it'll be an hour and a half, just because of traffic and things like that. And then you've got to try and park. Parking's extremely expensive as well. So if you can avoid, if you live in a city, avoid using a car. That will save you a lot of money. Another thing, rent. Now with rent, again, not quite as easy as food and things. There's ways to reduce rent. As I've said before in some of my passive income videos, if you have a 2-bed place, you can put one of the bedrooms on Airbnb, rent that out. That'll probably pay for your rent of the whole place. Or you can get a roommate. Depends whatever you prefer. You can also think about changing where you live. If you live right in the centre of the city, it'll be very expensive. But obviously then you will save on transportation costs to your job. So you have to work it out and see, if moving a little bit further away, if that saving there will still be worth it when you take into account, the additional sort of travel time there. With health, if you live in the UK or many European countries, healthcare is generally free. So you don't have much to worry about with health. If you live in the United States, unfortunately, that will be a big deal. If you don't get health insurance or something with your job and you're not in great shape, or you smoke, whatever, or drink, then health insurance will be a big bill for you. And then if you've got a family, then you've got to pay for your children and things. This is quite a hard one really to reduce. The costs. Obviously you can change your insurance providers and things, but that's always really going to be a big bill for you. The best way to reduce that really is to make yourself healthier, so you're not as much of a risk to the companies, and your insurance premiums will go down. If you're overweight, lose weight. If you smoke, stop smoking. Obviously easier said than done, but that's just one way of lowering that bill. Now with utilities and internet, that kind of thing, phones, you just need to compare the providers. With electricity bills, it's easy enough. All you need to do is go on a comparison website and check the different companies and change companies. If you pay for satellite TV, cable TV, check the price that you've got at the moment on your contract is normally extremely expensive and way more than the introductory offer. So just phone up the company, say you're changing to one of their rival companies, and normally they will offer you 50% lower rate for 6 months. Once that 6 months is over, ring them up again and threaten to cancel again. Yes, I mean, it'd be great if you didn't have to do that, but it's just one option. Or my best suggestion is just to put Netflix, just cancel satellite cable TV. All those packages with phone, internet, it's just a rip-off. Who uses a house phone these days? Nobody uses a house phone. Mobiles, the plans are so good on them, unlimited data, unlimited calls and all of that, so nobody uses a house phone. It's just a rip-off. The rates for the TV is just extortionate. All most people need is internet. And another thing is they often sell these in packages, trios and duos. You don't actually need to get those. You can just say, I only want internet, and it will normally be, a certain amount reduced off of the price with internet and a home phone. You don't need a home phone to have internet. Years ago they used to say that. I think when it was dial-up you used to need that, but you definitely don't need to now. I myself just have internet, for example, so that's one way to save money. With phone bills as well, you want to check the different companies out and see who's the cheapest basically. Now unless you live right out in the country or in the mountains or something, most phone providers will cover everywhere. All of the main sort of populated areas will get good coverage. So while some have better coverage than others, some network providers, if you live in a major city, that doesn't matter. You just want to go with the cheapest option there really. So there's just a few tips to help you save some money. So thanks for watching, guys. Give the video a like and see you in the next video.